Hello, traders. It is Thursday, April 2nd, and we've got a really dull market so far today, but that's actually a good sign, and I'll tell you why in a minute. So right now we've got the S&P 500. This is a 5-minute chart of the SPY. You can see how we opened pretty choppy. Long green candle, couple of red candles, then we get a little bit of a rally in here, and it looked like the market was poised to roll over right in here. I took a couple of short positions, and then news came out related to the oil industry and the market shot higher. There are a lot of credit concerns in the oil industry. Banks have lent them a lot of money. And we had Whiting Petroleum, WLL, file for bankruptcy. So there are going to be some casualties in that space. And it is important to the market. So we get this nice market rally. A lot of energy stocks took off. And we probably saw some short covering in that space as well. And then the market quickly gave back those gains. You can see how we're currently struggling to get through the high from yesterday. We're trapped in this range between the low yesterday and the high yesterday. If we can get to the high of the day today, we have a chance to fill in a little bit of this gap from yesterday. And the price action right now suggests that there is a bid, which is good. That means that the selling pressure was not able to gain traction after yesterday's nasty day. Let's zoom out and take a look at that daily chart. And here you can see how the market was bumping up against the resistance level 1, 2, 3 times. Couldn't get through that resistance, so sold off. Pretty natural reaction right there. And today we are finding support, which is good. We are not seeing one bad day, another bad day, another bad day. That would be problematic, and it would suggest that we would easily test the low from last Monday, which was SPY 218 approximately. There is some longer term support at that level. There's actually a 100-month moving average that comes into play right around that low there. So what I'm trying to tell you is that there is a pretty decent bid to the market right now. The market is forward looking, it's anticipatory, and the first thing that needs to be resolved is the coronavirus. We're probably about 10 days from it hitting its apex in the United States. There's more really dire news ahead. There will be a lot of casualties. It's going to continue to spread. But at least within 10 days or so, we should start to see the increase in the number of new cases decline. And that is the first thing that the market needs to see. And then we can start talking about all of the economic recovery. Will consumers go back to their old habits? We don't know. It's a big unknown. Will there be credit issues? We don't know. If this is resolved this month, meaning in April, and the shutdown ends, then everything can start to get back to normal, and I think that credit issues will not be that elevated. But if this happened to go through May, then you're going to start seeing all sorts of credit issues. And we may still see credit issues along particular groups, industry groups, and individual companies. So that has yet to play out. We've just got to get through the coronavirus right now. I'm expecting a couple more days of bad news. We could come in and test that 230 level. I would look for a higher low double bottom and then another little grind higher. The fact that we're seeing support a day after a big sell off tells me that there is a bid. Buyers saw the buying last week and they are taking comfort knowing that there is a bid, there is support. So I'm finding it much easier to trade from the long side than I am from the short side. But this chop intraday has been pretty difficult. Now I've got a couple of stocks that I'm going to show you. One is TMUS, and I do have a current long position in that, as I mentioned to traders in the chat room. I said you have to buy any pullback, and it looks like I'm going to get filled. I'm about a dime away from getting filled on a $1 winner. Saw this big pullback, long tail under body. Another one got long right in here around the 86.69 level. This is one of the trades I highlighted early in the day. I said, listen, it's going to be super, super choppy. You just got to pick a really good stock and then wait for a pullback, hope for a pullback, buy that pullback, and then sell into strength. So that's exactly what I'm doing. And I think I'm a penny away from my $1 profit on that trade. So looks like it will be hit. I just got long JPM. I've noticed a little bit of strength in banks. You can see how JPM took out the high from the prior day right here. That was Wednesday. Pulled back a little bit with the market, but then zoomed right up to a new high of the day. This is excellent relative strength. it's starting to fill in this gap. So banks do a lot of business in the energy sector. They've got a lot of loans out there. I don't know that JPM in particular does, but there are a lot of workers employed in the oil industry as well, and that's always good for credit and for lending. So the banks like that news, and we see that the stock is continuing to move higher. I've got a target in on this one, probably about 20 cents higher than where it is currently. You want to get into positions, you want to set your targets, and you want to be taken out of that position when you hit the target. Go to cash as often as possible during the course of the day. That allows you maximum flexibility to evaluate the market and to keep looking for new opportunities. But as soon as you're in a position and you're having to babysit it all day, then you're stuck because you're sitting there watching that stupid position and you're missing other opportunities that come up. So even though you hit your targets and the stock continues to run higher, don't fret. That's an excellent thing. You hit your target, move on, look for the next opportunity, wait for that next window. That's what we have to do. This is very choppy price action, so you don't have to feel as though you have to rush in and buy anything. You have to be very patient and bid for stocks that you want to own. CLX is another one that I wanted to buy on a dip, and I got the dip, and I'm getting the release right now, and I've got my limit order in there at 179.71, coming up on that for a nice $1.50 gain. So I should be able to take gains on that one also. So I'm long TMUS, I'm long JPM, and I'm long CLX. I'm going to take a quick look at the uh, bullish list here, relative strength 30, see if there's anything good coming up. So this helps us identify stocks that have relative strength. You'll see CLX on that list. DOCU is one that I had mentioned yesterday. It's trying to get through this resistance. When I day trade stocks, yes, this would be a nice move through horizontal resistance, but I would not prefer trading this stock from the long side. I would prefer to trade a stock that is already through the prior day's high. So CLX is a good example. Above the prior day's high, it pulls back and it finds support at that prior day's high. That's a good candidate. JPM I already showed you. And the reason I like doing this is that it's already cleared the path of resistance. So it has unlimited upside potential. It's not going to be capped, if you will. And there you can see how JPM is above the high of the day and above the prior day high and into the gap. That's what makes it attractive versus the other stock that I just showed you. ZM was super weak today. That would be another one. So I'm not as crazy about getting long something like this when it's below the prior day's low. For sure, I'm not interested, let alone the prior day's high. It's not even above that. So that's just a tip on how I like to day trade from the long side, but I do want to take a look and see where else there's strength. Home Depot caught my eye. You can see how it's also trying to get into this gap. It is challenging that high of the day. We're going to put up the 1 OSI indicator, and then you'll be able to see the orange line above zero means that it has relative strength. That stock also is looking a little bit better in here. CVX super strong, energy sector. XOM was also very strong as well. So I think you'll find some decent movement here. These stocks have been hit really, really hard on the battle between Russia and Saudi Arabia. And President Trump is looking at all sorts of different options that he might have to strengthen our domestic oil production. The strategic oil reserves are one consideration. He's talked about maybe having uh, tariffs on imported oil. Who knows? All I know is that when the economy gets back on its feet, oil consumption will resume fairly quickly. And China's already getting back on track. That will help oil prices dramatically. We are the United States, just a FYI, the United States accounts for 25% of the world's global oil consumption. So we are a major, major player. And when our economy shuts down, it's going to weigh heavily on oil prices. When we get our economy going again, it'll take off. So the demand for oil, that is. So I'm just going to take a look, see if there's anything else that looks good. J&J, I like this little rally up through the prior day's high, starting to fill in the gap. On the D1 chart, it also looked pretty good. So this is how we find stocks. I can go through bull run. This is another fantastic search to use. And right now we've got a little bit of a market rally in here. So you can see the strength that's building as I click through some of these candidates. And that's what we do. We just keep flipping through these charts one after the other. NG, super, super strong. That is a gold stock. But that's how we find our opportunities, and we're looking for that relative strength right there. So when you come upon a stock like AVGO, and I know one of our members got long that in here, you can see, and I'm going to put up the SPY overlay. It was on this list earlier. That's how he found it. Market pulling back, pulling back, pulling back. The market is that gray line pulling back. What's the stock doing? Holding its own. That means that buyers are buying, buying, buying. Every little dip, buy it, dip, buy it, dip, buy it. They can't get enough of it. That's why it never has a chance to go down. That's why it starts showing up on our radar, because we got the market coming in and the stock has a firm bid. As soon as the market finds a little bit of support right in here, zoom, higher, gone, see ya. And that's when we want to set our targets. Be taken out of the trade. We get our pop. In this case, maybe it's a couple dollar pop. Actually, it's about a $4 pop in this stock. Thank you very much. See you later. Next. And we keep plugging through these lists over and over and over. And as you do that, you're going to find more and more of these. And ideally, we've got a market pullback like this, because then it makes it really easy for us to identify that relative strength. So that's how we trade. I'm going to leave you with an excellent pick that I found today. I always try and give you some good day trading picks. I've shown you a bunch of them. TMUS, JPM, CLX, HD looked like it was starting to get going. KR's been another nice one. Those are all great picks. And want to give you a swing trade that I really like today. And I'm going to leave you with FLS. I found this on one of the searches this morning. And I know Flowserve. They actually make pipe fittings in all industries, whether it's water related or it's oil related, but they do a lot of work in the oil industry. And so it is tied to energy, and that's why it got this big spike. So let's take a look at that daily chart, and you can see how the market sold off yesterday before any of the news on the oil industry. Look what the stock was doing. Grind, grind, grind. I love this stock, and I'm going to own this for a swing trade, and I'm not going to think twice about it because it's an excellent company. Trades at a low PE ratio. Now, in the energy industry, you've got tremendous debt loads. It's a very capital intensive industry. Look at this company. $5 in cash, so it's got a very, very strong balance sheet. $12 in debt, so they can operate for a long time on that cash position. Forward PE of 9. They can ride out this little blip in the energy industry. They'll be in fantastic shape. At this particular price, I think this is a great, great scoop. And so I mentioned in the chat room today, I said, folks, I really like selling these April 20 puts right here on April 17th. And I like getting 90 cents for them. They were bid at 90 cents when I showed that trade. And we had people even getting $1 for those puts. That to me is a slam dunk. Buy that stock for $19? Sure. Right here at a 52-week low, absolutely. With that kind of strength, and now you've got some decent news from the energy sector. The only thing is, you're probably not going to get a chance to buy the stock at $20 because it's going to continue to grind higher, and those option premiums are going to evaporate in the course of the next 2 weeks. So, in that instance, $20 strike price that you short, you have to put up 20% of that strike price for naked put writing. Actually, your margin will be less than that, but I like to use 20%. So you have to put up $4 for that naked put. You're bringing in $1. That is a 25% return in a 2.5 week period. Oh, I love that kind of trade. You bet. So we're finding all sorts of opportunities like that. If you like this content, please give it a thumbs up. Make sure to subscribe to the YouTube channel. Turn on your notifications so that you never miss one of these videos, because I'm going to show you great day trades like I've done today, and I'll try and throw in a stock like FLS when I see it. Thank you. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.